Hey guys, Simulate and Trade here. I wanted to make a video preparing you for what I expect to be the most likely scenario to be this week. I know there is a bit of anxiety after that huge run last week, and many are wondering if the price is going to go down or if it's going to keep moving up. We are going to cover all of that and more, but first things first. I want to thank you for watching my last video. It is the best performing video in this channel by a large margin, and I am beyond grateful for you guys coming around and helping me. You guys are the absolute best, so now let's turn things back to business and plot out how this week is likely to go. We have more regulatory amendments that passed, and some people took advantage to freak other people out for no reason. I didn't shout it out because I wanted to share it with you first so you can get the best explanation. But before we get to all the fun stuff, a word of caution. I want to begin with a warning, because if you are following GameStop and AMC, you have most definitely seen short interest rates being thrown around as and used as a metric to measure how bad of a situation hedge funds find themselves at a particular moment. I have covered this before, but we have many new faces and you are due for a reminder. No, short interest is perhaps the most useless piece of data to use, at least the one that is provided by Ortex and other popular services. The reason why you should ignore that is for the following reasons. 1. The short interest is the number of shares borrowed to short a stock that have yet to be bought back. Short interest, outside of the context of GameStop and AMC, can generally be used to determine market sentiment for a stock. Due to hedge funds printing counterfeit shares like it's a sport, it is impossible to determine the number of shares in the market. The only thing you need to know is that there are more naked shares out there right now than legitimate shares. Because of this, short interest as a metric to determine a hedge fund's position is entirely useless. The short interest data is not accounting or factoring in the ridiculous number of naked shares that are in the market. Reason number 2, the shorting and the attacks aren't only being directed at AMC. Hedge funds are attacking the entire market, from ETFs to entire indexes that follow both AMC and GME in order to drive the prices down. Market sentiment, much less hedge fund and bank shorting positions, cannot be assessed using this data because most of what is happening is unknown in quantity. And this leads me to reason number 3 as to why you shouldn't rely on this metric. Clout. I am seeing a growing amount of people with larger followings pumping these numbers in order to drive home the wrong premise. They are using wrong data and information, sometimes fully knowing what they are doing, to chase popularity. Be careful who you follow, and be even more careful and observe how they react when faced with undeniable evidence that this metric is useless. Many quickly revert to calling out FUD as a mechanism of defense and throwing the ball on the party actually bringing up correct information. Shills are everywhere, and I have been saying for a while that our ranks are going to get saturated with people who will unintendedly and intentionally create a lot of confusion if it means getting a couple of likes. Short interest is unreliable because it doesn't account for naked shares, which we know vastly outnumbers the number of legitimate shares. Market sentiment, which is one of the goals for which short interest exists, is being manipulated outside of the stocks themselves, making the data a bit more unreliable. And people will ignore all of this to chase clout and spread misinformation, which is why I urge you to not follow any random Joe because he says the things you wish to hear. We are in a surge right now, and many are taking advantage of the trend. And this leads us to our next topic of discussion. Why are people calling what AMC in particular went through a squeeze? Anyone that dares to imply that this little surge is a squeeze should be corrected, and if in the face of being corrected they act hostile, you need to be wary of that person. In fact, I would recommend quit following them, because their intentions are most likely corrupted and tainted with other more secretive purposes. AMC is not and has not squeezed. The increase in price action that we have witnessed for the past couple of weeks where AMC has been moving up can be attributed to a variety of factors including trending on social media, hedge funds and banks both buying the stocks and allowing it to return to what can be considered a more correct price range where the value of the stock represents the sentiment of the market, among many others. There also exists the fact that hedge funds had to allow it to rise due to deep in the money options that they could no longer manage, and hence they had to allow some of the built-up buying pressure to balloon the stocks. This is not a squeeze. A squeeze happens when a member is forced to buy back droves of shares back. If we squeeze, it is unlikely for AMC to be the one leading the way. I know the majority of my viewers love AMC, but looking at the numbers and going through the data, AMC definitely shadows GameStop. GameStop moved very bullishly, but not as aggressive as did AMC, implying this is just a lot of institutions and retailers moving in out of FOMO to day trade the stock, which is why we have seen such a big surge in volume. Also, Look at the chart itself. Does it look anything close to a squeeze? The stock simply moved up bullishly, and has been for weeks, but nothing about it implies a huge surge in vertical volatility. We expect the price to move into the hundreds with ease at the very beginning of the squeeze, and we were moving $5 to $10 on the daily, so it's not even close. I wanted to share these things quickly before covering some of the more interesting developments that have taken place because creating FUD is part of the cycle to the squeeze. Hedge funds are operating in increasingly hostile ways, with newer evidence pointing to them even bribing people to say bad things about the stock. Be careful to what you listen and, more importantly, to who you listen. Trust in the information, not necessarily the person. We say things like buy and hold, which I stand by strongly. But we are an increasingly active community, and what is said matters and will have great ramifications across everything that will happen. Now, let's transition to some very positive news. There were 2 trading amendments that were recently approved. Though these amendments did not come from the DTCC or any of its members, some people actually started talking about them and confused a lot of folk for no good reason. The amendments essentially clarify and change some minor stuff in regards to halting a trade in the events of something extraordinary, like a squeeze, were to happen. Now, crayon-eating apes started spreading FOMO, telling people that this new amendments warrant the right for the exchange to prevent a squeeze and ruin it all just for no real reason. Check this out. If direct your eyes to the top of the documents, you will see that these amendments pertain solely to NASDAQ, the New York Stock Exchange, which is the exchange of GameStop and AMC shares. What is to note here is that the entire process of approving these amendments happened so quick. I think other exchanges might also know what is coming and looming around the horizon because the process by which they went about approving these 2 amendments is extremely sketchy. People also took to Twitter and started saying that Citadel sold $28 billion worth of security on Friday. As you can guess, wrinkle-brained apes started getting all happy for nothing, because upon clicking on the SEC filings, the assets sold are congruent with typical filings every year. Again, please be careful about what you read. Now that we got all that covered, let's get to the meat and bones. This past week, GME and AMC traded pretty similarly. They moved up with increased strength as each day went on up until Friday. Now, in this channel I have said that both stocks are due for a pullback. I still stand by this, because as I have repeatedly said, much of the growth we have seen can be directly attributed to hedge funds and banks buying the stocks and helping drive much of the momentum we have seen. AMC was obviously the more aggressive and volatile of the 2 shares, but both behaves almost exactly identical, indicating to me that both are shorted through naked shares by the same exact algorithm machines and same order execution. Now, the stocks were beaten pretty bad on Friday. AMC found strong support at around 25.70s and GME found support at 220. I think on the day-to-day chart and even the 5-day chart, both stocks are severely oversold. I do not know the intentions of hedge funds to manipulate the stocks, I just know they are. I mean, on my previous video I showed you how Goldman Sachs bought billions worth of calls. This is no coincidence at all. I believe, based on probability as to what is most likely to happen, both stocks will. I think Tuesday will be crucial to how they will behave for the rest of the week because we will be able to determine whether hedge funds want them to retest their previous high that they reached on Friday by the amount of short attacks that take place. If AMC is able to move up and consolidate at 28, closing at this price or higher, then I will be very bullish for the week. I will think it is more probable for the stock to then want to test $30 and then 32 before moving up to 36. However, AMC does have to build strong support and move with higher highs and higher lows. It cannot move dramatically upwards only to then dip and fall below it, because that is just volume volatility that doesn't really build the steps needed to carry the stock over to 36 again. The same with GameStop. I want to see it break 233.75 and build above it, with plenty of consolidation. We break that, and the stock tests 243 and I become very bullish. Remember guys, the key indicator here is that it needs to build upwards with multiple times where it consolidates. Look at Friday in the morning for an idea of what I do not want to happen. If the stocks run and then fall below the support lines they found in the after hours on Friday, we will go down sooner than I thought. If we dip, I think we see AMC touching $20 before a bounce up to 22 while GameStop could fall down to 210 before bounce up to 215. I don't want you to fear a pullback, because whether you like it or not, it will happen. This run is being pushed by market makers in order to day trade and push options. The moment I see Goldman Sachs placing a ton of put options, it will imply that this is over and we revert back for sure. However, the thing to note here is that I do not believe we will revert back to the lows we were at. Take a look at this chart and think about what you see. We see that on late April, both AMC and GME were moving upwards, finding that momentum before they were heavily attacked. But the key part here is that they found support and bounced again. Both stocks have been on an upward trajectory since around May 10th. They have had extreme dips, especially on Friday, but look at how overblown and vertical that run was. Of course, it was due to a pullback, which is why I think it will now rebound. If we hit those key levels I talk about, build not vertical, but rather in a slanted fashion, surging and building walls, we will definitely retest the highs, and if we break them, well, that is amazing. The one who will determine that run, not squeeze, because remember, this is not a squeeze, will be the banks and hedge funds, since they are the ones betting with the market to rally up. Before we head to the last slide, I want to show you, take note that AMC is going to find support at 17.77, 15.80 and 12.99 or $13 if you are basic like me. GameStop will find support at 220, 188 and 173. If we dip and fall back to each of these support wall, expect small bounces off of each. And now, this is the grand price of your success. Take a close and careful look at this chart, and ask yourself, what do you see? For all the FUD, for all the daily articles that come out telling people to sell because AMC and GameStop are going to crash, this extended 180-day chart looks incredibly bullish to me. On both stocks, the price action seems to slowly increase over time. Now, many people have been asking me if it is too late to buy. That answer depends. It depends because 1, it's never too late to buy stocks that will be worth thousands of dollars, with GameStop now being estimated to be millions per share. But, in a more technical sense, yes. As you can see, both stocks are running. I personally am waiting with my funds to buy more. I bought a ton on Friday and will wait and see if AMC drops below 17. If it doesn't even drop below 20, then I will take a chance and buy then. For GameStop, I want the price to test 198. If it doesn't dip below it, then I will buy at that price level. If it does, then I will try to buy closer to 175.20. I hope this video helps serve as a bit of a guidebook into this week. Keep your expectations realistic and grounded. Forget about the whole squeeze trending tags, because this is not a squeeze, which is a good thing. It allows you time to gather funds and invest more and more, so take the eventual dip as a sign of opportunity to enrich yourself when the squeeze actually does come. Thank you to all that watched and share my last video. I had a couple of people join my Patreon, an act that I am eternally grateful for. If you are looking for a way to support this channel, feel free to pledge support or send a one-time donation through Cash App, both linked below. With that said, I will be out for the rest of the day, so don't expect another video tonight. I have been in my room for far too long and need a bit of a break, so I will be taking today off. I hope you guys enjoy the rest of the day. Thank you to all veterans watching this video. Thank you for servicing your country. Your government or banks might not be thankful, but I am. And with that, I will let you go. See you guys later.